Okay, let's unpack this. Welcome back to the deep dive. We're taking all that great material you shared and boiling it down. Today, altcoins. It's this huge, fast-moving part of crypto. You send over some fantastic sources, articles, guides. Our job is to, well, cut through the noise.
Exactly. The mission for this deep dive is simple. Help you really get what altcoins are. And not just what, but why they matter, how they fit in with Bitcoin, and what their rise means for, well, everything, digital assets. We want you leaving feeling truly clued in.
Right. So for someone mostly familiar with Bitcoin, what's the big mental shift needed here? Because the name itself, altcoin, it's like alternative and coin. Right.
Right.
Basically anything not Bitcoin.
That's it, exactly. And that simple difference is huge. Bitcoin, it proved the concept, decentralized digital money. But look, it had limitations, speed, energy use, things like that. So altcoins popped up afterwards, often trying to fix those issues or, and this is key, do totally different things. Litecoin was super early, back in 2011.
And the scale is just staggering. One source mentioned, what, over 16,500 cryptocurrencies by April 2025? And altcoins make up roughly half the total market value now. That's huge. Does that, I don't know, dilute things, or is it just evolution?
I lean towards evolution, definitely. It shows massive innovation. And to make sense of it all, you really need to know the difference between a coin and a token. A coin, like Bitcoin or Ethereum, runs on its own blockchain, its own network. But a token, that runs on top of another blockchain, often Ethereum's. It uses Ethereum's tech for its own purpose.
Okay, so I'm seeing two main camps from the sources. You got forks, like modified copies of Bitcoin's code, and then others build totally from scratch. New goals, new tech.
Precisely. And the driving force behind most of them, it comes back to Bitcoin's limits. Trying to be faster, greener, more private, or just more versatile for different applications. Each one tries to bring something unique to the table.
Which explains why the altcoin world is so incredibly varied. It's not just one thing. It's like this whole ecosystem of different tools, different communities.
Absolutely. Think of it like different sectors in a digital economy. You need different tools for different jobs. Let's break down the main types you sent over. First up, utility tokens. These aren't just money, they give you access to services on a blockchain, like ETH for Ethereum gas fees, or BNB on Binance, started for discounts, now powers a whole system. XRP for moving money across borders, Matic for fees on Polygon. They do something on the network.
Okay, then stablecoins. These are meant to be, well, stable, right? Less volatile, pegged to things like the US dollar.
Exactly. Tether, USDT, USD Coin, USDC, DAI. They aim to hold a steady value. Their role is massive. Kind of a safe place during market swings, a bridge between old finance and crypto, but traders use them constantly. Moving value fast, dodging bank delays. It's like crypto's internal plumbing.
Visible plumbing, I like that. Okay, next. Governance tokens sounds important. Holders get voting rights in the network.
That's the idea. Maker, MKR, is a great example. Holders vote on DAI stablecoin rules, like interest rates. It's genuinely revolutionary, really, giving communities direct control over the protocol's future, how it changes, gets funded. It's sort of like digital democracy for finance protocols.
Fascinating. And for privacy, we have privacy coins. Shielding user info, trying for max anonymity. How do they actually pull that off?
Good question. They use clever tech. Monero XMR uses ring signatures and stealth addresses. Think of ring signatures like hiding a speaker in a crowd. You don't know who exactly spoke. Stealth addresses are like temporary, untraceable mailboxes. Zcash, ZEC, uses something called zero-knowledge proofs. Prove something's true without revealing the details. Now, regulators are watching these closely, obviously, due to potential misuse, but they also meet a real demand for financial privacy in our super digital world.
Okay, then we get to the, let's say, more eccentric side. Meme coins and niche tokens. Meme coins start as jokes, but then get huge support. Social media, celebrities. Sounds wild.
It can be. Dogecoin, Shiba Inu, classic examples. Prices can just skyrocket, especially during what people call altcoin season, often driven by pure speculation. They usually have enormous supplies, sometimes unlimited, so the price per coin is low. Makes small bets seem appealing. Niche tokens are different, though. They target specific industries, like Axie Infinity for gaming, or Filecoin for decentralized storage. These show crypto isn't just about finance, it's branching out everywhere.
And the list keeps going. You mentioned others briefly. Payment tokens, security tokens tied to real assets, exchange tokens, play to earn, NFT-backed, energy-efficient ones using proof of stake, forked coins, cross-chain tokens. Wow, the diversity is just immense. So, okay, we see the variety. But how do these altcoins really compare to Bitcoin? What are their distinct roles? This is where it gets really interesting, I think.
It is. Let's look at purpose and functionality. Bitcoin started as digital cash, peer-to-peer, but its main role now, more like a store of value. Digital gold, right?
Mm.
Protecting wealth, hedging inflation. Altcoins, they do way more things. Ethereum brought us dApps, smart contracts, changed the game completely. Stablecoins like USDT, USDC, they provide stability needed for trading. Privacy coins like Monero, anonymous transaction.
And transaction speed and scalability, that's often cited as a Bitcoin weakness, isn't it?
It is. Bitcoin blocks take about 10 minutes. Transactions can lag. Many altcoins are way faster. Ethereum creates blocks every few seconds now, especially with proof of stake or POS. POS also helps it scale better, handle more transactions, use less energy. It's a big shift. Litecoin, around 2.5 minutes. Solana claims like 0.4, 0.5 seconds, processing thousands per second. Avalanche is also quick, maybe a minute.
Huge speed differences. What about adoption and security? Is Bitcoin still king?
Well, Bitcoin's definitely the most adopted globally. That first mover advantage from 2009 is powerful. Its market cap was around, $1.77 trillion in early March 2025. Still the biggest by far. But altcoins have grabbed significant ground, finding their own niches. Ethereum's the smart contract leader, maybe $263 billion market cap, powering huge ecosystems, dApps, NFTs, DeFi. Binance Coin, BNB, maybe around $87 billion,
Right.
crucial for its exchange and chain.
So yeah, altcoins aren't just alternatives anymore. They're expanding the whole digital asset world, built in new ways. Okay, let's shift gears. Altcoin season. It sounds exciting, maybe a bit crazy. What actually is it? And how do you know if we're in one? What are the signs?
Right, it's a term you hear a lot. It basically means periods when altcoins, as a group, start performing much better than Bitcoin. You see these really dramatic price jumps across many altcoins, often pretty quickly. It usually happens after Bitcoin has had a big run up and then cools off, goes sideways. Investors see the gains slowing in Bitcoin, look for higher returns elsewhere, and money flows into alts. This pushes altcoin prices up and actually reduces Bitcoin's share of the total crypto market value, its dominance.
So decreasing Bitcoin dominance is a key signal. What else? Specific metrics.
Yeah, that's a big one. Bitcoin dominance going down suggests money is moving. Conversely, look at altcoin dominance. When the total market cap share of all altcoins combined starts rising, especially past, say, 55%, that's a strong signal. Historically, it got close to 67% back in 2017-18 and near 60% in mid-2021. Other things, higher trading volumes in altcoins compared to Bitcoin, lots more chatter, social media buzz about specific alts. Just remember, these seasons can be intense but short. Weeks, maybe months, they can end fast.
Okay, practical talk. Investing. High potential, sounds like, but also high risk. What are the pros and cons for you, the listener?
Definitely pros. Many alts do offer improvements over Bitcoin speed, features, efficiency. There's potentially higher growth. Smaller market caps mean a successful project could see huge percentage gains, much bigger than Bitcoin might offer now. You get diverse options. You can back tech you believe in, specific industries like gaming or AI, and many have utility beyond just being currency. They power apps, give voting rights, they do things.
But the flip side
Yeah.
sounds like it could be a minefield.
Yeah.
What are the big dangers?
It absolutely can be. The risk is significantly higher. Many projects fail. You could lose everything. Smaller alts are usually riskier. The market volatility is extreme. Prices can swing wildly. 20–30% in a day isn't uncommon. Less liquidity is often an issue, too. Harder to buy or sell large amounts without moving the price yourself. Then there's regulatory uncertainty. New rules could pop up and hit certain altcoins hard. And yeah, unfortunately, scams and failures are rife. Pump and dumps, fake projects. You have to be so careful. Maybe the biggest red flag? Anonymous teams or promises of guaranteed sky-high returns, if it sounds too good to be true.
It probably is. So, bottom line for you listening, research, research, research. It's absolutely critical.
Couldn't agree more. It's not just about financials. It's about understanding the tech, the team, the goal. Think about the project's purpose. Does it solve a real problem? Is there actual demand? Evaluate the team. Who are they? What's their track record? Are they transparent? Are developers actually working on it? Read the white paper. Does it make sense? Is the tech feasible? Roadmap realistic? How does the token work supply? Distribution? Watch for red flags. Look at market metrics. Cap, liquidity, volume, price history. Check the community and adoption. Is there an active community? Real partnerships. Is anyone actually using it? How does the team communicate? And security. Has the code been audited? Any past hacks? How decentralized is it really?
And assuming you navigate all that, you decide to invest.
Yeah.
Security is paramount, right?
Yeah.
Protecting those assets.
Yeah.
Wallets.
Yes. Crucial. You need secure storage. Different types exist. Hardware wallets, Ledger, Trezor, are generally seen as the most secure for holding long term. They keep your keys offline. Cold storage. Software wallets on your desktop, phone, web browser are more convenient for frequent use, but they're connected to the internet, so less secure. Exchange wallets leaving coins on the exchange where you bought them easiest, but riskiest. The exchange holds your keys. Paper wallets are totally offline, basically printing your keys, but they're kind of tricky to use safely.
And some universal rules apply, no matter the wallet type.
Absolutely. Core security practices. Number one, never ever share your private keys or your recovery phrase. Ever. With anyone. Write down that recovery phrase on paper, store it somewhere safe, maybe multiple places, not on your computer. Use strong, unique passwords. Enable two-factor authentication, 2FA, everywhere you can. Maybe use different wallets for different amounts or purposes. Keep software updated, and just be super vigilant about phishing scams, fake emails, websites trying to trick you into giving up info. Always remember that phrase, not your keys, not your coins. If you don't control the private keys, you don't truly own the crypto. So wrapping up this deep dive, altcoins have profoundly changed the crypto landscape. They brought waves of innovation, opened up new markets, added functionalities Bitcoin never aimed for. Bitcoin and altcoins together, they form this incredibly diverse, sometimes chaotic, but constantly evolving ecosystem.
Yeah, and as more people look beyond just Bitcoin, getting a handle on altcoins is just essential now. Whether you're interested in the tech, potential gains, or just the future vision of finance, you need to understand this part of the picture.
Definitely. And maybe a final thought for you to chew on. As we see these digital assets become even more specialized, more interconnected, how might that very definition of altcoin change? What could that mean for the basic nature of digital finance, in the years ahead? Something to think about.